It's about that time of day again. My name is Joseph. Wednesday evening, October 31st. Welcome back to your nightly newsletter. My job is to help new traders earn consistent profits using a simple and reliable trading strategy. And my plan this evening is to identify the most reliable trading opportunities setting up for tomorrow's trading session. And tonight, I'm covering crude oil, S&P, Nasdaq, gold, and euro. Starting off this evening, crude oil is bearish with a strong move lower. So my plan is not to chase this move lower, but rather look for selling opportunities using a buyer failure pattern off the high of a hidden channel tomorrow morning. The S&P is bullish, but with the strength of this profit taking off the highs tonight, I know it's probably best to wait for a second leg lower before we go looking to buy this market tomorrow. And I've got my eyes on a couple key support levels. We're looking for those entries tomorrow morning. Nasdaq is also bullish with a spike and range pattern tonight, and that tells me to look for buying opportunities using a two-try seller failure pattern. And of course, we're going to use those range expansions tomorrow. Gold is bearish with a spike in range of its own. That tells me to look for selling opportunities at resistance levels. And on gold for tomorrow, we have a great combination of a range expansion along with a hidden channel high. I'm very excited to see what we get out of gold. You'll want to stay tuned for that chart here in just a few moments. Euro is bearish with a wide channel tonight, multi-tiered channel tonight on the euro. And that tells me to get up around those highs of that channel, and we're probably going to need to use that two-try buyer failure to sell the sucker back down tomorrow morning. Well, speaking of tomorrow morning, tomorrow is already the 1st of November. I can't believe we're talking about the 11th month of the year, but here we are, finished up a fantastic month of October, right? One of the best we've had in our trade room all year. And as always, we're only as good as our next trade, so we're getting ready for tomorrow's session. I got a great newsletter in store for you guys and gals tonight. We get some ranges, we get some strong trends. I'm going to break this whole thing down for us in just a few moments. Before we jump in, though, and open those charts, I need to remind you, if you're watching me tonight on YouTube, you can find a detailed description of this entire strategy written out right here on my blog at Sideways Markets. Also, if you have any questions about anything covered in this video tonight, please remember to post them in the comment section below. And if you like what you see, please help support this YouTube channel by subscribing and hit the bell icon so you get notified every time I post another video. And if your goal is to become a consistently profitable trader, don't forget to join the most elite group of traders on the planet. Grab our mailing list. All I need is your name and your email address, right? And join that group on our blog. Also, don't forget, if you want to download all the charts from tonight's video, all the charts in tonight's video can be downloaded by following that link right below the video tonight on our blog here at Sideways Markets. I'll also put the link in the description of the YouTube video. And if you have any questions about anything covered tonight, right, any questions at all, I've got a toll-free number and, of course, a live support tool on the upper right-hand corner of our website. All right, had a great day today. Let's get ready for tomorrow, though, because tomorrow we are busting into that first day of November. So, of course, tomorrow, first day of the month, we've got some big news on the schedule here for tomorrow. First things first here, we do have some manufacturing numbers, right, from Great Britain tomorrow morning at 5:30, and of course we got the BOE announcement, right, tomorrow morning at 8 o'clock Eastern time. So if you trade in the euro, we'll talk about the euro tonight. If you trade in the euro or maybe a little bit of gold because of the BOE announcement at 8 o'clock, you've definitely got your eyes on those two major news events tomorrow. Gold especially, right, during that BOE announcement, because they'll be talking about monetary policy. So if you're in Europe or if you're in Asia, right, or Europe, right, a little bit early for the U.S. at 5:30, and then, of course, right as we open up our trade room tomorrow morning at 8 o'clock Eastern time, right, we'll have that BOE announcement. So keep your eyes on gold and euro early in the session. Now, later on in the session, we get the jobless claims number here in the U.S., so that should get us going in the U.S. session around 8:30 Eastern time. We've got a little bit of, small stuff here, and then we go into the big daddy for tomorrow, the ISM manufacturing number. That's going to be a big market moving event. Combine that with construction spending at 10 a.m. and you've got the kaboom to kickstart, right, a brand new month. So if I had to guess tomorrow, I would expect to see a little bit of flurry there, right, from those BOE announcement tomorrow morning at 8 o'clock Eastern time. But I would imagine the big moves tomorrow are probably going to be coming around 10 o'clock. And as always, we will have a front row seat for this news tomorrow. We open up our trade room every morning at 8 o'clock Eastern time, and I hope to see you there with me. Let's keep going. Tomorrow morning, we're trading oil, we're trading E-minis, Nasdaq, S&P, gold, euro. Let's get this party started. I want to kick it off with crude oil tonight because crude is bearish with a strong move lower, a hidden channel, reversal line, and a measured move on the chart tonight. The bears have the momentum, so the plan is to combine entry patterns with some sort of resistance levels for selling opportunities tomorrow morning. And where do we have levels of resistance right now? Well, first of all, if I connect these two lows, right, kind of goes whoops, right, that 1, 2, 3 reversal, connect those lows, find the channel, mark up that low, and obviously that becomes a sweet spot, right? That's really the sweet spot where that channel along with that prior low collide. That would be a major level of resistance. But let's be honest here. The strength of this move lower is nothing to joke about. So we may not make it all the way up to that 65.79 level. So I've got my eyes on a little more aggressive area around that 65.49. The bottom line is right now we are definitely bearish. We are certainly bearish. And I'm expecting to see some sort of pullback here tomorrow, then use this first leg down. So of course, if we do get that pullback, we'll look for that leg down because that measured move will become our target as we go. If we don't pull back all the way to the 79, if we just pull back, let's say to the example of 49, right, then obviously that measured move will be a little bit lower. So be aware of that, right, for our targets here tomorrow. So we've got the prior swings at 49, 79, and of course the high of that channel. How do we get there? And then how do we get this trade put together here? Let's get this off the table there. That way we don't have that confused. But again, take that leg. Once we find the pullback, then that will become that measured move target for tomorrow, right, guys? And again, we're going to do this tomorrow morning with all of our clients tomorrow. So I'm going to cover a lot here tonight, but don't forget, right? We do this every day in our trade room. I know that's going to be complicated at first, but that's all right. I've got a great plan. I've got all kinds of cheat sheets and checklists that we'll work our way down with tomorrow. It'll be very easy once you come out and join me in the trade room. So what's a couple scenarios that you want to be considering? Well, there's a couple things you want to think of on the pullback. The first things first is let's get above that moving average, right? Let's get above the moving average. When we get above the moving average in a bear market, what oftentimes happens is we get this easy setup, right? It's this combination of a two-try failure into a hidden channel pullback. This is by far my favorite little combination pattern. It's a two-try failure. So we go above the moving average once, right, twice, and then once we see those buyers try twice, we can then look to sell right into their stops because at that point now, the buyers are fully roped in, and once the market starts going back to its normal trend, to its overall trend, those buyers are going to be stuck. They're going to have to get out for a loss, and that will just pour gasoline. Okay, there was a little bit of pun intended on that one, right? Pouring crude oil, right, on top of, right, that fire. So that will light the fuse going lower. That's my first option as we go lower here. At the same time, though, right, find that new low, mark up those lows. That creates that hidden channel, and that becomes another opportunity here to sell this thing, right, as we go lower. So that's the basic idea as we go higher here, right? One try, two try above that moving average. Get up in this area of resistance. Yes, I would like to use the top of that channel. If we don't get it, I'm not going to be heartbroken about it. And you know, again, we're trying to get up off this low, get above that moving average, and then we're good to go. Another pattern you want to kind of keep your eyes open for tomorrow will be what we call a two-legged pullback. That's where we go up one, we pull back two, right? It kind of sets that trend line there. Now we'll use that trend line, whoop, right, as a level of resistance on the opposite side. I call these two-legged pullbacks because they create that trend line, and then we can use that trend line as a level of resistance, right, as we go. So those are two easy patterns we're looking for here tomorrow as the market pulls back. Now, another scenario you want to consider is anytime we finish the day, right, anytime we see this much movement in one direction, oftentimes the following day becomes a bit of a trading range. So let's say, for example, here, right, we come out, a couple hours go by here in the overnight session, and we've got a double bottom on the chart. Now, double tops and double bottoms are one of my favorite patterns, but probably not for the reason that you're thinking. A lot of people, what they'll do is if they see a double bottom, right, they'll look at this as a reversal, right, as a reversal. The problem with that, though, is the market's bearish. It's not bullish. And in case you haven't been keeping track, most reversals only work about 30% of the time. Now, I do realize, a 30% winning ratio. Yeah, if you had a 5-to-1 risk reward, okay, I'm with you on the math on that. That works great in theory. But show me a real warm-blooded human that can take 5 or 6 losses in a row and still keep trading according to their rules. I've never met any human beings that can successfully trade a 30% winning ratio strategy. Maybe a computer, right? Because a computer obviously doesn't have that psychology issue. But if you're a human being and you're kind of buying into this whole idea of, well, yeah, it's a reversal. I'm only expecting me to be successful 30 out of 100 times, not 3 out of 10, by the way, 30 out of 100 because, of course, right, the law of large numbers. If we're going to be using that as our guide, it'll be very, very difficult for you to make money. The moral of the story is there are lots of rookies out there that love to use double bottoms, right? They love to use double bottoms as reversals. And what I want to do is I want to play right into those stops because I know now once we have that double bottom in, I know all those buyers here, they got their stops hanging out right below that low, and I know basically that is a big bullseye, right, for those sellers. So what we're going to do is if we do see it rolling into that double bottom, if we do double bottom here, now what I'm going to do is I'm going to take the size of that range, I'm going to copy and paste it up, right, same size of the range, copy and paste it up, that creates resistance, okay, then take that trading range now, again, right, copy and paste it down and create support. We call these range expansion levels. Okay, this is not that technical. It's very, very basic. Once you have your range, okay, first step is look for a range. Second step, add that range expansion above, add that range expansion below. You're going to see a bunch of examples on these on gold and the E-minis tonight, so we'll talk more about that. But the bottom line, though, is once we have those range expansions, then I'm going to look to sell up around those highs, up around the expansions, and my target now will be at the low of that range, and the runner, you got it, right, down at that range expansion. So what would that look like? How would we get into that pattern now? What would be entry pattern on that? It's the 2-try failure pattern. We're looking for it to go up once. I want to see it pull back, try again. That now becomes 1 try for the bulls, 2 try here for the bulls, and now we can look to sell back down in. And remember, right, all of those buyers that look to take that reversal off that double bottom who are foolishly trading against that momentum, right, their stops are going to be a sitting duck below that low. So if you can, try to leave a portion of the position open because a lot of times it'll slam right through that low and go right to that range expansion. That's why I like to use that range expansion level as another target, because when we get that double bottom, the buyers call the reversal, but eventually it will tip over, right, and run them right back out. It's a great trade here for a short. And again, if we can use the top of that channel, then great. But if we get a sideways range, that's the plan, right, that 1 try, 2 try, and sell back off of that, sell above that range tomorrow. Now, one more scenario I want to go through here tonight, and that is, what if we keep going lower? What if we keep going lower? There's a couple different things that I'm watching for if the price keeps going lower. One, let's say we keep pushing lower like that, right? let's say we finish up, we keep going lower, right? Then we bounce. I'm going to adjust this channel, right? And then keep the channel right there. So same basic plan that we talked about earlier. So if we keep going lower, just keep adjusting that channel. And I know this can be tricky sometimes, so I'm going to do it with you tomorrow in the trade room. But again, the goal would be at that point, get above that moving average. We talked about this already, right? 1 try, 2 try, failure, hidden channel pullback, and we're right back down, right? 1 try, 2 try, you're into that level of resistance now, right? And you're looking for that failure, right? Into that hidden channel pullback to sell back down from there. And again, if it keeps going lower, right, and it goes sideways down here, it's the same basic principle, right? 1 try, 2 try, sell it, right? Run out all those stops, right, below that low. So that's the basic idea, right, if we get the market to continue going lower. One last thing here. How do we turn bullish? What does a reversal look like? Well, remember, a reversal needs to do more than just pull back. Because we talked about this earlier, right? If we pull back above that high, I'm expecting, we go above the moving average, I'm expecting buyers to come in and try to buy this. We know where their stops are. And if that struggles, right, I'm going to be selling right into that, right, into those stops. Because at that point, as I joked around earlier, it's gasoline, right, on the fire at that point. You've got sellers selling high, and then at that point, you get the buyers getting stopped out. So what do we need for reversal then? We need to see a strong move higher, but strong moves higher in bear markets are not enough to turn that trend. They oftentimes collapse back down. So what else do we need? We need follow through. We need that follow through. We call this what we call the 1, 2, 3 breakout, right? And there's an exclamation at the end of that, right? It's a 1, 2, 3 breakout. And that third leg, right? That 1, 2 pull back to the moving average, and then breakout, right? That number 3, that break higher, basically what that tells you is the sellers have given up on this and the buyers now have control. These are not buyers buying up here. Let's be very honest. Those are sellers getting out of their positions because they now see the writing on the wall. What's the plan then? We mark up that high. That creates support. We mark up that high. That creates the channel. Then what do? Yep, look for that sweet spot, right, to buy off of that low. Where's our target? Target's easy, right? Back up around that 67, back up around, right, today's high. So same plan. If we go up, just got to wait for the proof the market turns bullish. Now we're talking. Great plan there on crude. Let's keep going. How about some S&P right now? S&P is bullish with a spike in range, a hidden channel, and a strong bear move this evening. The momentum is clearly bullish, but the strength of this move lower, right? Look at how strong this thing is coming off of this high. The overall momentum is obviously bullish, right? We called that reversal a mile away earlier this week, didn't we, right? Great job on that for making money on that as it reversed off of that low. We were talking about how to use the moving average on Monday night, and that definitely, right, that definitely was a great heads up for this big reversal. We're clearly bullish again, but this move off the high is really strong, right? That's a really strong move. So anytime we see a strong move in one direction, what do we always expect? A second leg, right? Just like this strong move, we expect to see another leg, right? So when we see a strong move down, yeah, there is potential this thing goes right back up here, but I'm expecting to see a group of sellers here trying to sell this thing down that second leg lower. So my goal is I want to be a buyer overall right now, but I want to be patient and let that second leg go lower. Then from there, we can start looking at support levels, right, to be buying off of, such as this pendulum swing. I've got this spike up, right, into this, I got this strong move, right, into this double top right now. As you can see, it's not a perfect double top, but it's close enough in my book. I know right now there are probably a lot of stops up here, right, because I'm sure a lot of people saw that and sold it. They took their profit off their long trades, but I'm sure there are a lot of rookies out there who just have gotten the habit of selling a bull market with a double top. And so I know their stops are there. That might as well be a big bullseye. And now going lower here now, I want to look for 1, 2, and then try to run out those sellers as this thing slams back up to retest the high. So I want to find levels of support to do this. Where can I do that? Well, I've got my eyes on this range. Okay, double top tells me that's probably a range. A range, I can take the size of that range, copy and paste it up to find resistance. I can copy and paste it down to find support, right? So that's a key level of support that we can use. Another key thing here is the amount of the move above that range can be used as support below the range. We call this the pendulum swing. The pendulum swings up, the pendulum swings down, and that level there, right, around that 01/2 area, that will be a key level of support. So we have two real easy levels of support waiting here below, but wait, there's more. If I dare sound a little bit cheesy here tonight, right, I can take that high here, up to that high here, bring it down to that low, right, and create that hidden channel as well. We really do a lot of work with channels every day in our trade room, and this is no different. As you can see, I'm using a very specific technique for drawing this channel, right, the high of this swing to the absolute high of the session. A lot of people, I'm sure, would draw that channel like this, but you will get poor results drawing it like that. I'll teach you more about drawing those channels in our classroom sessions, but for now, that low, right, that low really is an attractive area here for us. So we know we're bullish. Now we've got plenty of support levels here, right? How do we get into these bad boys? Well, we have that strong move down. I'm expecting that probably somewhere above these highs, you're going to have sellers waiting up here, and they're going to try to get that, right, that run back down. Once we get that run back down, get into this level of support, get into these levels of support here, now we have a chance here to be a buyer. I want to let's do this, right? We'll get rid of that red line, trap high there, right, and sell back down. That will be our second leg lower. Now from there, right, I'm looking for that classic two-try failure pattern. One try, two try, failure, strength, pull back, right, back up we go. One try for the bears, two try for the bears, then we look to buy into those stops. That's the first option. Then find that new hidden channel. You got it, right, and we buy off the low of that channel for that rally going higher. You're probably going to have to buy it pretty low tomorrow, because I would imagine once we start running higher here, all those sellers with their stops waiting up here, they're going to see the writing on the wall and they're going to bail. Again, I always love it when I see a double top in a bull market, because I know that double tops counter trend, right? So a double top in a bull market, right? Double bottom in a bear market. I know that buyers are taking profit, but more importantly, I know there are sellers up there with their stops hanging up there, and it might as well just be a big old bullseye, right, for those buyers, and it almost always goes back, right, and retests them. Once we get that retest, then maybe it turns into a range, but that's my plan. And you might be asking, right, well, how do you use? So when would a double top or double bottom be useful? I always like to go with the momentum. So if we have a nice strong run, right, for the bulls, now I look for that strong move down. Usually that goes below the moving average. I look for that second attempt, right, and when I see that double bottom right here, oh yes, now with the appropriate signal, we look for that 1, 2 opportunities here now, right, to run this sucker right back up to retest the high. So I do have many ways I like to use double tops and double bottoms. One is to catch rookies on the wrong side of the market, right? And two is to use it going with the trend to capitalize on that momentum. So right now we're looking for that second leg lower. Then we should be getting below the moving average. One try, two try, failure, right? And then pull back from there. Now, another thing you want to be aware of here tomorrow is if we end up rolling lower and going sideways down here, right? So watch out for that trading range, right, as we go. How do you play this one, right? What's the technique on this one? Well, if we end up going sideways down here, now what you want to do is you want to grab that range expansion, right? Add that range expansion on. And ultimately what you want to see is I'm looking for a 2-try breakout in combination with a trap. This is a little more tricky because what you got to do is you got to see that thing push through that high, but then you don't want to trade it up there, right? I don't want to buy up here. You buy up there, you're going to lose money more often than not. Wait for the pullback now, right? And look for that trap, right, down around those lows. That'll be the key if we go sideways, because you don't want to get wrapped up in trying to buy a breakout of a bear bias range. You want to wait for those buyers to show they've got what they need, right? And then look for that little trap low there and buy that trap. That'll allow you to stay on the right side of the market without buying high. Pretty simple, right? Now, I know you're probably thinking, well, what if we go, how do we turn bearish, right? What is the scenario where you start selling tomorrow? Well, that's actually pretty easy. We've already got that strong move down. Remember that 1, 2, 3 reversal? We already get the strong move down. So if we see this moving average hold and we jump off those lows, this market immediately now becomes bearish. At that point, we mark up that low, mark up our channel, right? And I don't care how strong the trend was yesterday. If we come out and we see that strong move off the moving average, we now know we're looking for those sells, right, as we go off the top of that hidden channel. So maybe we do get the reversal tomorrow, right? I'd be foolish to be closed-minded on that. I don't care what direction I trade, and I also don't care what market I trade. As long as I know what the momentum is, right? Right now, overall momentum is bullish, right? And as long as I know where the objective is to get back up and retest that high, right? So I know I want to buy low. If we do run higher, I don't want to chase after it and buy into those highs. If we do run higher, right, look for those little traps and buy, right, and buy off those traps before we go back up and run out all those sellers, right, off a retest of that high. It's a great chart. It's a great chart and a great lesson, right, on double tops. Here's another one, right, on the Nasdaq tonight, right? Very strong move up and looky, right? Another set of double tops here, and you know what that means. You know there's going to be a lot of sellers here who are trying to call a top, right? They probably justify it by saying there's some pivot point up there that nobody cares about, right? Or there's some Fibonacci retracement, or maybe there was divergence, right? Higher high, lower high, right? Or maybe it's just simply a double top because they feel the market has gone too far. The bottom line is, whatever story you want to tell yourself about why you should be calling tops and bottoms in a razor sharp trend, the Nasdaq's bullish. It's pretty obvious we're bullish right now. We're not bearish. So trying to be a seller right now is certainly playing with fire, right? We're bullish. We have a spike in range, a hidden channel on the chart tonight. The bulls have the momentum. That's obvious. So my plan is to look for buying opportunities by combining entry patterns with support levels tomorrow. Where do we have some support levels here for tomorrow? Let's take a look at this a little bit bigger picture here right now. Where's our support levels? Well, again, we've got this kind of run higher here. So I've got these highs, right? I've got that low. I think that's going to be the best fit, right, for that low there tomorrow. So that's a key support level. That's something I'll be all over tomorrow, right, looking for that buy here tomorrow. And then what else do we have here? Let's zoom in a little bit closer here right now, right? What else do we have here as far as a support level? Well, again, you've got that range. Again, anytime we see a double top, and do not look for perfection. There's no such thing as perfect. Well, I mean, I guess there are, but it's very, very rare that you see a perfect double top. So get over the idea of getting perfect double tops. They're always going to be a little bit rough around the edges. The key is we know the top of this range, the buyers did not buy the highs. The buyers took their profit. They took their profit. Profit came off the highs. That is a double top. And I can guarantee you, right, there are sellers who once they saw this thing starting going lower, right, they probably took their short right about there. Stops are hanging out right above that high, right? Anytime I see a double top in a bull market, it tells me two things. One, it tells me this now becomes a range, right? Mark up the high, mark the deepest point between the highs, that becomes the range, right? What does the range tell me to do? It tells me to take the size of that range, copy and paste it, that becomes resistance. Size of that range, copy and paste, that becomes support. Okay, we want to buy at support, take our profit off, right? Buy at support, right? Hold that runner, right? Profit is at the high of that channel, that range, and of course the runner up around that 7,100. What else does a double top tell me? A double top tells me there are rookies out there, right? Reading all the old trading books, trying to sell double tops, and we know those stops are there. And as soon as those bears see the writing on the wall, they're going to get the heck out of town, right? They're going to cover their positions, they're going to short covering rally, and it will just slam right back up, right, to retest that high. So I've got to find a way to get in down below that range, right? Because I might not get a chance to buy it as it goes higher, because as the writing hits the wall and those bears dump their contracts, right, and go running for cover. So what are we looking for here, right? I got a couple options here. I want that channel low, right? I like that little tiny reversal line right there. So this really is kind of the sweet spot here for me at that 04, right? That 04.25. Now, as we go lower here, right? That'll be one try. That'll be one try. We then look for a second try off the moving average. Remember, if that second try really nosedives, right, that becomes a bear market. So we'll talk about that in a second. At that point now, I'm watching for a signal. Everything requires the right signal, and we'll talk more about the specific signals tomorrow morning in our trade room. But for now, we're looking for a chance to buy right into those stops, right? So once this price, right, starts pushing higher here, now we know it's time to jump in. We're buying into the stop losses of the short-term sellers. What happens when you get stopped out as a bear? You become a bull. It's the only way to get out of your position. If you're short, you've got to buy your way out. So at that point now, you've got buyers buying the low of that channel, buyers buying the low of that range, and at the same time, you've got sellers who are also becoming buyers as well. That will usually light the fuse and send this price running higher. But what else? What else could we do here, right? Do we buy from here? No, right? We wait for that pull back now, and we look for the pullback from there. That is usually going to be, right, your 1-2 punch, right? That 2-try failure and that hidden channel pullback. It's definitely what I'm looking for right here tomorrow. Now, what if we sit inside here, right? What if we sit? What if we don't do anything? What if we kind of stumble around this big round number? That's fine by me. We're still looking for that 1 try, that 2 try, and that move back up, right? We'll still look for that same pattern sequence, even if it goes sideways here tomorrow. Now, what if we slam back higher here? Then what do we do? I don't want to buy the high. I'll wait and see if we can get it off the low. What if it breaks through the high? If it breaks through the high, it'll probably break on strength. Look for a spike in channel pattern. If it breaks through the high on strength, look for that deep pullback down to the base of that channel. That's the pattern we look for when a market breaks on strength, right? If it breaks higher here on strength, you'll feel it. Right? It'll feel like another one of these rallies, right? Where it just breaks out and runs. If that's the case, look for your new channel. You can buy the low of that channel. What I like to do, though, is I like to wait for that deep dip down to the base of that channel, and that's usually where the big money is. That's usually where that's where the big pot of gold is, right? Waiting for that big dip down. But again, if you're going to be buying as it goes higher, it's really got to push, right? It's really got to push through that high and confirm we're not done yet, right? We're going higher. So that's the plan. We'll look for that spike in channel and we'll buy from there. Last but not least, how do we turn bearish? Strength. Pull back to the moving average. And then what? Strength off the moving average. This is not drawn to scale, right? This could be earlier. This could be later. Once we see that strength, pullback strength, that 1, 2, 3 reversal, then we find that new channel, right? And we'll just sell off the top of that channel. That, in all reality, is all I'm trying to do right now, right? There's that 1, 2, 3 reversal, find that new channel, right? Buy the low of that channel. That's all I'm doing right now. It's just on a bigger scale, right? You can easily see these patterns work in both bull and bear markets. You just have to first make sure you ask yourself, who has control of the momentum right now? And right now, it's a bull. So I want to be a buyer anytime I see a seller try and fail around a support level, right? And again, anytime I see those double tops, right, in a bull market, I know trading range, 1 try, 2 try, back up, below the low of that range. What else? Stops are up here, right? Sit and duck, big bullseye, waiting to get hit up top there. Look to buy low and leave that runner, because oftentimes when it does go back up to retest the high, it's not going to stop there. It's going to blow through that high, and you'll have that range expansion waiting as a nice juicy paycheck waiting for you, right? And all those sellers who tried calling that top and bottom, right, they'll make sure they learn their lesson off that, right, and do it the right way the next time. Now, more of these double bottoms here tonight. Gold is bearish with a trading range, a channel, and a reversal line on the chart tonight. The bears have control. So my plan is to look for selling opportunities using my favorite entry patterns in combination with resistance levels overhead, such as the high of this channel, right? I've got this lined up at the lows. I've got it, you can't really see it up there, but I've kind of got this little multi-tier channel here, right? These are one of the easiest ways to look for applicable levels of resistance. You could look at this as a spike in channel, right? It's basically what it is, right? Spike in channel. And then you can add on another trend line on top there. I'm just simply calling it a larger channel, kind of a multi-tier channel. I think you're going to see a lot of people start to use that right now because this move lower has just been so robotic. You're going to see a lot of folks start to use, right, that resistance level here overhead. But in all reality, though, right, there's a lot more resistance we can use out here. For example, I really like this reversal line right here. I like that reversal line because you can see it's once, twice, 3 times, 4 times. People are loving on that 26 area. So I would imagine if you were to look at a chart right now, a volume profile chart, you'd probably see a lot of that volume piled up right around that 26 area. And if you study volume spread analysis, if you study order flow, right, you know that market's going to try to come back to those volume areas, right, to get their fill and then try to go, right, fill in all of those open spaces, right, once they get their fill. So I would imagine a lot of sellers are waiting up there, and that would be a great level of resistance to use on top of it. Also, too, what do you see? Yeah, double bottom. What does a double bottom tell me? It tells me there's probably a range here. Take that range, copy and paste it up. That creates resistance. Copy and paste it down. That creates support. We've talked about that a couple times already tonight. You guys are experts on that now. What else does it tell me? It tells me sell. 1 try, 2 tries, sell it back down. Why? Because you know there are buyers who are going to try to buy this, right? And once they realize they're wrong, they're going to get the heck out of those positions, and this will collapse back down on its own weight, right? You can see good examples of similar patterns, right, like this. 1 try, 2 try, and then collapse right back down. 1 try, 2 try, collapse back down. That's the plan, right? Get that target off at the low, and again, I like to leave that runner because there will be quite a few stops down there, right, to let that thing run down to that 1209.3. And if they keep going lower tomorrow, right, if we keep going lower, not much changes. We're still trying to go up, trying to get that 1 try, 2 try, right, and sell back down. So if we do keep going lower here tomorrow, if we keep on rolling lower, not much changes. We want to see us go up, get up into resistance, get above that moving average, right, let that 1 try, 2 try, failure, strength, right, hidden channel pullback pattern as we go lower. And guys, I've talked a lot about these patterns tonight, these 2 tries, these hidden channels. We've talked about ranges, strong trends. I want to give you even more information than I can give you here on this nightly newsletter. So if you want to learn more about this strategy, more importantly, if you want to see real examples of all of these patterns on a real chart, that way you can see what they look like, right? And you can learn a lot more about these patterns. There's a free course in the upper right-hand corner here. I'm going to drop a link here for you right now in the upper right-hand corner. Grab that link in the upper right-hand corner for that free trading class, and I'll teach you all about these patterns. I'll also send you an invite. Come out and join me as a guest in the trade room. So grab that course. I'll also link it up in the description of this video as well. If you're on the blog tonight, it's right below the video. There's a big red button there that says join the free trading course. So don't be afraid, right, to take that free class. That way, right, that way you know you can get a deeper dive into all of these patterns right here tonight. So jump into the upper right-hand corner, grab that link right in the upper right-hand corner, and I'll see you on the inside of that free class. Now, how do we turn bullish here? How do we turn bullish? Well, Well, first of all, we've got to get through this range expansion level up at 23.5. That's the first thing. So we're going to see a strong move up, a pull back to that moving average, and then, of course, that strong push through. If we can get that strength, that pullback, and that strength, yeah, good to go. Then we know we're bullish. Then we can find that resistance, turn that resistance into support, draw that new channel, find that channel low, and now we're looking to buy that pullback as we go higher. If we do get this thing to rally higher here, there's a big juicy target waiting for those bulls up around 1246. We're at 16 right now. That'll be a pretty hefty move for one day, but I don't see any reason why, right? If those bulls can take control early here, I don't see any reason why we couldn't get a nice big, maybe 168, 1682, something like that. Big extension higher there tomorrow. That could easily be in the cards here tomorrow. But first, we've got to get that market to reverse right now. That's what we need first, right? So we got to wait for that reversal. Then we can get worried about, right? Then we can worry about those targets here as well. So again, grab that free course. It's in the upper right-hand corner. Grab that information icon in the upper right-hand corner. You'll be happy you did. Or again, it's linked up below the video in the description here below. Let's keep going. Last but not least here on the euro tonight. Over on the euro is bearish with a channel and a measured move on the chart this evening. The bears have the momentum, so my plan is to find selling opportunities using my entry patterns in combination with resistance levels overhead. And of course, I've got my eye on the high of this channel. Very similar to gold. I'm kind of looking for a larger channel, right, as a level of resistance. I also have my eyes on these prior two swings. One thing that really stands out on this chart is that we've had zero traps. Zero. Right? Literally zero traps. We haven't seen anything really break above a prior swing, and there are likely going to be a lot of sellers waiting up there. In fact, I would imagine if you were to look at the order book at a brokerage shop right now, you would see sellers above the highs, right? Big block orders to sell, to sell, to sell, to sell. I'll bet there are a lot of traders who are willing to sell into this as high as about 15,000, right, as this thing goes higher. So my plan for tomorrow is I'm not going to leave those blind limit orders. I'm not that style of trader. What I will look for, though, is I'll look for this rising market higher. I'm going to look for that moving average coming over. I'm going to look for these buyers to try to buy that pullback. I'll know where their stops are. I'm going to look to sell right into those stops. And if I can get it, I'll look for that hidden channel, right, and to sell off that hidden channel pullback pattern as well as we go lower. At the same time here, I'm also watching this for a possible two-legged pullback. Right, we'll try to use that trend line now as resistance as well. Another pattern we want to keep our eyes on. And of course, don't forget, there's also potential. This could be a range tomorrow, right? We could easily go sideways right into the first of the month. If we do go sideways, now right? Find that range expansion, and you know the drill. One try, two try, sell it back down. Anytime I see a double bottom in a bear market, I know it's a range. I know I want to sell with that two try failure above that range. And then, of course, I know there are stops down here. So I always like to leave a little portion to run as we push through those lows. All right, guys, excellent charts here for tonight's newsletter. Tomorrow's a brand new month, a brand new opportunity, and I really hope I get a chance to trade it with you tomorrow. We open up our trade room at 8 o'clock Eastern time. Don't forget to grab that free trading course in the upper right-hand corner or below the video on the blog or in the description of the YouTube video. Don't forget, I've got a toll-free number right there on the homepage if you want to call anytime to ask questions. We have information about our 3 levels of membership and, of course, a great free trial if you want to come join me in the trade room and learn more about this strategy. As always, I'm here to help. Hit me up on live support. Call that toll-free number, and no matter what, tomorrow morning, 8 o'clock Eastern time, it's go time. I'll see you guys tomorrow morning. If not, we'll see you tomorrow night, same time, same place for tomorrow night's newsletter. My name is Joseph. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye.